everybody, I'm Jamie Trull. I'm a CPA, financial literacy coach, and profit strategist. Right now, I'm putting together lots and lots of content for you guys to help you through all the COVID-19 stimulus things that continue to change. So I'm making this video in March of 2021 for some of the new changes with the Employee Retention Tax Credit, sometimes called ERTC or ERC. So I'm going to walk you through exactly what that is and who it applies to and what the changes they made in the American Rescue Plan that just passed on March 11th means for you. And the good news is it means potentially lots of extra dollars in tax credits. Tax credits are money in your pocket, okay? They're not deductions. They're way better than the deductions. They're actually credits that come to you, credits back of your payroll taxes. So first, let's talk about who this applies to. If you are an employer, right? If you have W-2 employees outside of yourself, okay, then this applies to you. So this is not for my self-employed, my solopreneurs. I've got lots of other content on my channel for you, so make sure to like and subscribe and go check that out. But this is for my employers, people who are employing people outside of themselves and their family and are interested in getting this employee retention tax credit. So let's give a little bit of an overview, and then I have a spreadsheet. Some of you guys have this worksheet, some of you don't. It's going to be super duper helpful. I'm going to tell you where you can grab it if you don't have it. But it is going to help you calculate out, number one, whether this applies to you, and number two, estimate out what your credit could be. I also have multiple different eligibility decision trees, because I love a good decision tree, that will help you walk through the rules and determine if this will be something that you qualify for. So there are different rules in 2020, and yes, you can get a retroactive credit to 2020, you guys, even if you got a PPP loan. There's also different rules in Q1 and Q2 of 2021, and even different rules in Q3 and Q4 of 2021. So the new American Rescue Plan that just passed did extend the ERTC through the end of the year. But there are a couple of nuances that you want to pay attention to, because even if you didn't potentially feel like this was something that was applicable to you before, it might be now, okay? So you can still get it with PPP. The new changes in Q3 and Q4 actually have a new thing that has been put in. So I'm going to show you really quickly the eligibility calculator for Q3 and Q4 and talk about the changes, and then we'll take it back a little bit and talk about the credit itself. But I want to make sure that you see what these changes are and how they could apply to you for Q3 and Q4. Now, make sure you have this spreadsheet. If you don't, go to jamietrull.com/ERTC and grab it. People have been saving thousands of dollars by using this template. It is worth it. So go grab the template now, and then you can walk with me through this. Okay, so let's jump right on in to this worksheet. Okay, so first things first, when you jump into this spreadsheet, in the back of the spreadsheet, you will see there are 3 different tabs. All 3 of these tabs have decision trees that will help you figure out if you qualify and what you need to do to figure out what your credit is. So I just want to jump here because these are the most recent changes. And I have another video that goes through this in more detail for the other quarters. But some of the changes that are new for Q3 and Q4, let's walk through. So firstly, previously to these new changes, if you started a business after February 15th, 2020, you could not get the Employee Retention Tax Credit. Womp, womp, right? But one of the changes now for Q3 and Q4 is that you actually can. If you are a newer business that employs W-2 employees, you can potentially qualify. So let's say you started your business after February 15th, 2020. Well, you're going to come over here and you may qualify as what is called a recovery startup business. So that is a brand new concept for Q3 and Q4 of 2021. If your gross receipts are under $1 million, you can qualify, and you don't have to show a decline in gross receipts. So that's something that if you are trying to apply for the Employee Retention Tax Credit, you may have to do if you're talking about 2020 or the first 2 quarters of 2021. But in Q3 and Q4, for a business that started after February 15th, you don't have to show a decline, and you can still be eligible to get up to $50,000 per quarter in a tax credit. So that amount is essentially going to be $7,000 per employee is the max per quarter, up to $50,000, even for brand new businesses. So that is exciting for those of you who started new businesses and have hired employees. This can be a great, great thing. And of course, you can't use, if you've already paid it with COVID, sick, or family leave under FFCRA, it doesn't count. So let's say you were in business before then. Does anything change for you? Yes, it does. In Q3 and Q4, you can see that there's another question that's been added here, which is, have you experienced a decline of at least 90% in gross receipts in Q3 or Q4 2021 compared to the same quarter of 2019? Okay. If the answer is yes, if you have lost more than 90%, so you've had a really significantly impacted business, you can qualify as a severely financially distressed employer. So you can see that here. So there are different rules for severely financially distressed employers, but basically you don't have the same cap that other people will have on the total amount that they can take. So previously, if you don't fit in this, but you otherwise qualify, which we would walk through in the rest of this decision tree, if you didn't qualify for the 90%, but you otherwise qualified, then you would have a cap of $10,000 of qualified wages per person per quarter. So I know this is confusing, but this spreadsheet will help lay this all out for you so you can see it all and follow the decision tree for your specific situation. But if you're a severely financially distressed employer and you end up over here, then you don't have those caps on qualified wages. So if you paid more than that out per employee, you're not going to have those caps. So that means you could get an even bigger ERTC credit. Okay, so again, you can't use PPP funds. If you've used those PPP funds specifically for that time period, for that payroll, you can't claim ERTC on those wages, but there is a way to strategically claim certain wages for PPP and certain wages for ERTC. So you want to make sure that you're being really intentional about how you are doing this. It's almost like each dollar is tagged, right? So you want to use your PPP funds, likely. You want to use your FFCRA, COVID, sick, and family leave. And then you've also got this employee retention tax credit. So a lot of your payroll should basically be able to be paid by one of those three different mechanisms if you are paying employees. So if this doesn't apply to you, you're basically going to go back to the exact same rules that existed in 2021 and follow that decision tree. So you can qualify if your gross receipts for any of the quarters in question were less than 80% of gross receipts from the same quarter in 2019. That means having a 20% or more drop. It gets a little confusing because we switch back and forth between talking about how much we dropped and talking about how much less our gross receipts were from the same quarter. But in this case, it would be a 20% drop in gross receipts. And you can kind of follow this down. If you don't have that 20% drop, then you would go the avenue of determining whether your business was fully or partially suspended by a government authority. If it was, you can potentially get the credit or a partial credit for wages paid while you were shut down or partially shut down. If you do meet having a 20% or more reduction in gross receipts from one quarter of 2020 versus the same quarter in 2019, then you will qualify for the credit. Okay, so there are a few nuances in here. I'm not going to go over all of it for the sake of time, but it's all in this worksheet, jamietrell.com/ERTC. And I'm going to show you what else is in here and when you're actually using this, how to use it. So there is an instructions tab, but I want to show you kind of just a quick walkthrough. So there's a lot of information on this gross receipts tab that just gives you some information about the rules in 2020 versus 2021 and what has changed. So this is a nice little overview. This has been updated for the American Rescue Plan that was passed in March. Additionally, down here, you're going to determine what quarters you qualify for. So if you qualify because you had that gross receipts drop, you're going to start here. Now, if you qualify because you were shut down and you don't have a gross receipts drop, then you're going to go straight to the qualified wages tab. But let's say you have that gross receipts drop, or maybe you're not sure and you need to calculate it out. You're going to start here, and you're going to be able to put in some numbers, and it's going to tell you exactly which quarters qualify. Now, I've gone ahead and filled in some of this information on your gross receipts just to show you an illustrative impact of how this works. So you're going to put in your gross receipts. And for gross receipts, we do talk about you don't include things like PPP, EIDL loans, or any other loans, unemployment compensation. None of that is included in here. This is general gross receipts in your business. So you're going to put in gross receipts for each quarter of 2019. That is your basis of comparison. So you're going to compare 2020 back to 2019 and 2021 back to 2019. Okay. Now let's look at what we put in here. So in this case for 2020, essentially we don't actually qualify in Q1 or Q2. And the reason is because the rules in 2020 were different. You had to have a quarter, at least one quarter that was down at more than 50% in order to qualify at all for that year for ERTC. So if you had no quarters that were down more than 50% in 2020, you probably won't be able to get the credit retroactively for 2020, unless you were shut down or partially shut down, in which case you could potentially get that credit for the time that you were shut down. But if we go further here, let's say in this instance, we were down 50% in Q3, and 33% in Q4, both of those would be qualifying. And there are some rules around when that ends. So even if, just for an example, even if we recovered fully and we didn't have a decline at all in Q4, we would still have a qualifying quarter. Why is that the case? Well, the reason is because your qualifications are determined based on the quarter before. So until you get to a quarter that is down by less than 20%, you are going to continue to have qualifying quarters. Now, 2021, the rules are different and they're actually quite a bit more favorable for business owners. We're over here in 2021, and again, we're comparing versus 2019, even in 2021. So you can see in the first quarter, we were actually up. So of course, we wouldn't have a qualifying quarter there. In quarter two, we were down 25%. Now we don't have to have a 50% drop in 2021 in order to count. We just have to have at least one quarter that's down by 20% or more in order to count. So that's important to note. So you'll see in this case, again, remember, we qualify here in Q3 because we qualified in Q2. So even if we were up in Q3, we would still qualify because we qualified in the quarter before. So what we do once we figure out these qualifying quarters is we're going to go to the qualified wages tab. And again, there's some information about what counts as qualified wages and some exceptions that's included up here. And then you're just going to list your employees, and only for the qualifying quarters. You don't want to fill this out for non-qualifying quarters because it doesn't really make sense, but only for the qualifying quarters, you're going to come and put in the wages you paid. Okay, so I went in and put in some wages paid for us to look at. So remember, only Q3 and Q4, because those were the only qualifying quarters that we figured out on the gross receipts tab. So I've put in those amounts, and it's automatically figured out the total qualifying wages, because for 2020, we're limited to $10,000 per employee, and the estimated tax credit, because you take that times 50%. So you can get up to $5,000 per employee for 2020, and you can get that retroactively. And then you're going to come over here, and you're going to put in the same things for Q2 and Q3 of 2021 because we qualified for both of those quarters. And in this case, you can see how it's quite a bit more lucrative. I've put in some amounts, and your qualifying wages are higher, and also your estimated tax credit is higher. So the way the qualified wages is working is that it maxes out at $10,000 per employee per quarter, and then it times by 70% to get your estimated tax credit. So when we add all this up, and this is with 2 employees, mind you, when we add all of this up, we're getting a $10,000 estimated tax credit for 2020 that we can claim retroactively, and a $21,700 tax credit for 2021 in Q2 and Q3. So that's a total of $31,700 in tax credit. That's money they will give you back, okay? You can either take it as a credit against your payroll taxes, or they will actually cut you a check and reimburse you for these payments that you made to your employees. Essentially, this is the government paying your employees on your behalf. This is not a tax credit you want to miss. So I want to make sure that you guys are grabbing this spreadsheet, jamietrull.com/ERTC. It could be worth thousands, up to $33,000 of a tax credit per employee. You want to get this. You want to get this. And hopefully it's going to be super helpful for you when you're walking through it. If you already have the spreadsheet, I recommend playing around with it and seeing how your numbers come out. I do also recommend that you consult with your accountant or an accountant on this too, to make sure that you're claiming it the correct way. Basically, the way that you're going to claim it is for 2020 retroactively, you're going to do a 941X. You're going to amend your prior payroll reports and you are going to claim this credit. For 2021, you can actually claim this as you go along on your payroll, right? Or you can file a Form 7200 to estimate what they're going to owe you, and you can get that money ahead of time, even before you've finished the quarter. If you think you're going to qualify next quarter, you can actually estimate that and get that money in ahead of time. Or you can take it as a credit against your payroll tax. There are a few different options, but this is not something that you want to miss out on. This could be huge. So hopefully this has been helpful. Like I said, I have some other resources and videos specifically on the employee retention tax credit that go a little bit deeper than this overview that I gave today. So if your head is swirling, grab the spreadsheet. It will help you. Watch some of those other videos. Make sure that you look at the different decision trees that I have, because I think it will help give you clarity around whether you qualify or not. And I hope to see you next time. Bye for now.